What's your perspective on the Nigerian market at the moment, with the political environment today really starting to heat up?
Thank you, Alishia. Good morning. We've seen tremendous bullish run on the NSE in the start of the year 2011. This obviously belies all the concerns as regards the political climate in Nigeria. I think most of that has been on the back of the year-end activities of AMCON, where AMCON essentially purchased NPLs of the books of 21 of Nigeria's banks.
Mm-hmm. What's your investment strategy heading into 2011? Because while there seems to be quite a bit of optimism about, Victor, we can use the banking sector as a case in point here. There are many cautious about their approach, saying that there are just too many question marks about at this stage, centered around policy to really be launching in aggressively into the Nigerian market.
Well, yes, we are also optimistic, on as regards the market. However, we always do apply caution on the back of all the activities, with regards to Nigeria's banks and the resolution that we expect to play out, given the purchase of NPL and perhaps some M&A activity, and in some cases recapitalizations. We think that the outlook will be generally positive, for two main factors. The banks would obviously now be in a position to fully launch into what they are cut out to do, which is to provide financing to businesses. On the other hand, we are not as bullish as on the financial services sector as we are on consumer goods and perhaps infrastructure. We think that the consumer goods market will obviously continue to thrive on the back of a number of factors. The demographics suggest that there is a huge consumer population. The macroeconomy has in some cases outperformed even some of our own expectations, and this takes into account the infrastructure dearth that still exists in the economy. So we think that if there are any major investments in infrastructure this year, as being touted by all the political leaders, even though we know a lot of that is election speak, but we think that the outlook is moderately positive.
When it comes to the consumer goods space, a lot of corporate action rearing its heads. We've heard that Heineken has bought 5 Nigerian breweries and boosting its capacity in Nigeria by a third. How do you see this changing the brewing landscape over in Nigeria, where it is certainly a coup for Nigerian breweries, but a pretty stiff competition now being posed for a player like Guinness?
Well, I think the brewery space, has largely remained a duopoly of sorts. It has obviously been driven by two major competitors, Nigerian breweries and Guinness. Between both of them, they account for perhaps between 90 and 95% of the entire market share. If you look at it from a sales volume perspective, what Heineken has done, who is the majority holder in Nigerian breweries, is to acquire some of the other smaller competitors who are located in some other smaller regions where they've carved a niche for themselves. Perhaps we'll see that may take Nigeria's breweries' own market share from about 58% to perhaps 65 or thereabouts. I think what the strategy is, from our own perspective, or what we see Heineken trying to do, is to begin to project its product base to some of the other far-flung markets where you have that beer consumers who typically would have an acquired taste and will stick to it, may perhaps begin to reap the benefits of maybe perhaps better technology and distribution, as it were.
What would your approach to Guinness breweries be in particular? Because looking at Guinness, we had them out with March third quarter earnings forecast, that for a 9-month period where turnover is expected to come in at 31.9 billion naira, profit before tax at just over 6 billion, and profit after tax at 4.2 billion naira. Your perspective on Guinness right now, would you be a buyer?
Guinness has a fundamentally sound business. A lot of its market is pretty stable. You find that while there are what we call perfect substitutes for some of those lagers and ales, we still think that it should be able to preserve a lot of its market or consumers, as it were. But on the other hand, if you look at the valuations of Guinness, where it's trading north of 200 naira. And then you look at some of the indices like you just reeled out, earnings performance both pre and post tax, and and then you look at the number of shares outstanding, you feel that there is, a bit of a significant amount of premium, on current valuations, and I will not be a buyer.
Very quickly, your perspective on Nigerian bottling company. It's been rising under the proposed buyout plans announced last month by a parent firm, CocaCola Hellenic. And here we're looking at the potential of a delisting coming to the fore if this transaction does go through.
Well, quite clearly, Hellenic has made it clear that they want to take it private. But obviously, what that did was to spur a lot of demand, given the fact that at the current price, at the price when that announcement was made, and the target price for which Hellenic was willing to buy out shareholders, there was almost a 40% premium. So that has obviously driven the price and the activities. Well, one would have expected that in the wake of that announcement, that the shares of Nigerian bottling may have been suspended, but that didn't happen. It's traded up significantly, ever since that announcement has been made. But the kind of feedback we get from what's been going on is the fact that Hellenic has said they want to basically take the business private for a number of reasons. One, the major one being that the fact they want to make huge investments over the next 3 years in terms of expansion. Quite clearly, what that means is in the course of that period, there won't be any form of dividends or any kind of returns to shareholders, and they don't want a situation where shareholders will begin to protest that kind of action.
Well, Victor
so
Ndukauba,
that is obviously what has happened.